Happy Monday, everybody. Today is July 20th, 2026, and this is your Monday market update. Now, last week was another reminder that markets are constantly balancing opportunity against uncertainty. Investors received encouraging inflation reports, another solid round of corporate earnings, and continued signs that the U.S. economy remains resilient. At the same time, renewed tensions in the Middle East push oil prices higher, while investors began asking tougher questions about whether the enormous spending on artificial intelligence will ultimately generate the returns that everyone's been expecting. When the week ended, those concerns outweighed the good news, resulting in a modest pullback for the major indices, but perhaps more importantly, a shift in leadership beneath the surface of the market. On Monday, markets started the week under pressure as geopolitical tensions escalated. Iran continued attacks on commercial shipping attempts to move through the Straits of Hormuz, raising concerns about global oil supplies and sending crude prices sharply higher. At the same time, semiconductor stocks sold off around the world as investors continued questioning whether expectations surrounding artificial intelligence had become just too optimistic after such a tremendous run. President Trump later announced that the U.S. would reinstate a naval blockade on Iran, easing some concerns that shipping traffic could grind to a complete halt. Even so, markets remained cautious as investors weighed the potential inflationary impact of higher energy prices alongside continued uncertainty in the Middle East. By the closing bell, the Dow fell 0.25%, S&P declined about 0.75%, the Nasdaq lost roughly 1.5%. Tuesday brought welcome news on inflation. The consumer price index came in cooler than economists expected, while core inflation also slowed. The report reinforced hopes that inflation pressures may have peaked and initially sparked a broad market rally, particularly among interest rate sensitive sectors. However, the enthusiasm faded somewhat after Federal Reserve Chairman Kevin Warsh reiterated that the Fed remains focused on bringing inflation back to the target and was not ready to declare victory after just one encouraging report. Geopolitical headlines also continued throughout the day, but investors were encouraged after President Trump reversed a proposed fee on ships traveling through the Straits of Hormuz, helping to ease pressure on some oil prices. Overall, markets finished modestly higher as investors balanced encouraging inflation data against continuing uncertainty overseas. By the close, the Dow finished essentially unchanged. The S&P gained about 0.5%. The Nasdaq rose roughly 1%. Wednesday delivered more encouraging inflation news. The producer price index this time, that data unexpectedly declined, marking the second straight inflation report that came in better than expected. Investors welcome the idea that inflation continues moving in the right direction while the economy remains remarkably resilient, a combination that we often refer to as Goldilocks. Corporate earnings also remain generally positive, with several major financial firms reporting solid results. Despite the good news, technology stocks again became the center of attention. Investors continued rotating away from many semiconductor companies as questions grew about whether AI infrastructure spending can continue at its current pace indefinitely. Markets ultimately pushed higher despite the sector rotation. By the close, the Dow gained about 0.25%, S&P rose about 0.5%, the Nasdaq added roughly 0.75%. Thursday reminded investors that strong economic news isn't always enough to lift markets. Retail sales, jobless claims, and regional manufacturing data all pointed to an economy that continues to show impressive resilience. Under normal circumstances, those would be encouraging developments. Instead, investors worried that stronger economic data could keep the Federal Reserve cautious about lowering interest rates. Technology shares remained under heavy pressure after Taiwan Semiconductor reported strong earnings, but warned that manufacturing costs are likely to increase. Investors also continued debating whether the extraordinary amount of money being invested in AI infrastructure will ultimately generate the returns that justified those enormous capital expenditures. Later in the afternoon, additional headlines surrounding Google's antitrust case added further pressure to large cap technology stocks. By the closing bell, the Dow slipped about 0.25%, S&P lost roughly 0.5%, and the Nasdaq fell about 1.5%. Markets finished the week on another weak note. Technology stocks continued retreating as investors digested several days of disappointing sentiment surrounding semiconductor companies and artificial intelligence spending. Importantly, the story wasn't that AI was no longer important. Rather, investors are becoming much more selective about which companies they believe will ultimately benefit the most from the AI revolution. Meanwhile, geopolitical tensions between the United States and Iran remain elevated, keeping energy prices volatile throughout the week. Despite the pullback, it's worth noting that encouraging inflation data, solid corporate earnings, and continued economic resilience all remain supportive of the broader investment outlook. Sometimes markets don't pull back because fundamentals have deteriorated. They pull back because expectations have become so extremely high. Friday's results, the Dow fell about 0.75%, the S&P 500 declined about 1%, and the Nasdaq dropped roughly 1.5%. So what do we make of all this? At first glance, it might seem that it was a disappointing week for investors. But when you look beneath the headlines, the picture is much more balanced. Inflation continued moving lower. Corporate earnings were generally fairly solid, the U.S. economy remained remarkably resilient. Consumers kept spending, unemployment remained low, and manufacturing data surprised the upside. Yet markets still pulled back. Why? Because markets don't simply react to good news or bad news, they react to expectations. Over the past several months, expectations surrounding artificial intelligence have become incredibly high. Investors are no longer asking whether AI will transform the economy. They largely agree that it will. The question now is which companies will benefit the most and whether the enormous investments being made today will ultimately generate the returns investors expect. That shift in thinking led to a noticeable rotation during the week. Semiconductor stocks and some of the biggest AI winners came under pressure, while areas like financials, real estate, and consumer staples and energy, they generally held up better. That's actually a fairly healthy development. Bull markets rarely move in a straight line, and leadership often rotates from one sector to another. For the week, the Dow finished down about 0.75%, S&P down about 1.5%, the Nasdaq lost nearly 3%, reflecting that heavy selling in technology and semiconductor stocks. Another important takeaway was how markets handled the geopolitical news. Despite continued military exchanges between the United States and Iran and ongoing concerns around the Straits of Hormuz, investors largely believe that neither side wants a prolonged regional war. While higher oil prices remain something to watch, markets have generally viewed the conflict as a risk to monitor rather than a reason to dramatically change the long-term economic outlook. This week could provide answers to several of the market's biggest questions. First, earnings season shifts into high gear. Several of the largest technology companies report results, including Alphabet and Tesla on Wednesday, followed by Intel on Thursday. Investors will be listening very carefully, not just to earnings, but to management commentary about artificial intelligence spending, capital expenditures, and future growth plans. Those comments may help determine whether last week's technology pullback was simply profit taking or the beginning of a broader rotation within the AI sector. On the economic front, it's a relatively quiet calendar until later in the week when investors are going to get weekly jobless claims, S&P Global Manufacturing PMI, then S&P Global Services PMI, and new home sales. One encouraging note comes from Goldman, which recently raised its estimate for second quarter GDP growth to 2.5%, following stronger than expected retail sales and industrial production. While housing remains an area to watch, the broader economy continues to show impressive resilience, and that's so important. You may also notice there are no Fed head speeches scheduled this week. That's because the Fed has entered its traditional blackout period ahead of next week's policy meeting, meaning investors are likely going to be focused more on corporate earnings and economic data than on comments from central bank officials. Finally, geopolitical developments in the Middle East will continue to be closely monitored. Any meaningful changes involving oil supplies or shipping through the Straits of Hormuz could quickly influence energy prices and overall market sentiment. So as we look ahead, the market's really focused on three major questions. Will big tech continue investing aggressively in artificial intelligence? Will the U.S. economy continue to demonstrate the resilience we've seen throughout the year? And will corporate earnings continue to justify the high expectations investors have built into the markets? The answer to those questions will likely set the tone not only for this week, but potentially through the remainder of the summer. As always, it's important to remember that the short-term volatility is a normal part of investing. Even during strong market years, there are periods when leadership shifts, expectations reset, and investors take time to reassess valuations. While last week brought a modest pullback, the bigger picture hasn't changed dramatically. Inflation continues to improve, the economy remains on solid footing, and corporate America is generally delivering healthy earnings. Those are encouraging fundamentals for long-term investors. Listen, have a wonderful week. And as always, if you have any questions about your portfolio or your financial plan, please don't hesitate to reach out. Please check out the ongoing series on the Friday planning videos. And for the market updates, we'll see you again next Monday.